Good day, my people. I hope that you are well. Welcome to another episode of the Accounting Officer. Colleagues, as we usually do, thank you so much for the social media interactions that we have been receiving. I think on TikTok alone, we received more than 1.5 followers in the previous week. Colleagues, thank you so much, and I wish to appreciate and acknowledge the following and the interactions that have been happening, especially on TikTok. Those interactions, colleagues, I appreciate them, especially from colleagues who are working with these legislation that we are talking about, who are helping even me bring better interpretations on some of the examples that I was making. Colleagues, I appreciate your comments. So, colleagues, for those who are new to our channel on social media, we are on Facebook and Instagram, it's the Accounting Officer. YouTube and TikTok, it's Accounting Officer SA. Those are our accounts at the moment. Colleagues, we would appreciate if you would help us grow our channels and our basically social media reach and social media accounts. Continue interacting with us, colleagues. Continue bringing that fresh information for all of us, colleagues, not just to benefit the accounting officer, but to benefit other colleagues who are interacting as well in the channels. So, colleagues, if we could just recap on what we spoke about in the previous week, which brought us a lot of followers and brought us a lot of comments on social media. We spoke about the introduction to supply chain for departments, Schedule 3A and 3C entities, and also the constitutional institution. The reason that we were focused on these entities, colleagues, is because we were looking at Regulation 16A, which is only applicable to them per the Treasury regulations. Last week, we also spoke about the foundation of SCM, which starts from the Constitution, the PFMA, the Treasury regulations. We also spoke about the establishment of an SCM unit. We also touched on the procurement thresholds and spoke in detail about return price quotations and also petty cash quotations, which is formerly known as informal quotations. So some of the comments that we received last week, I think we made a comment about public works, that it rents out some of these properties, and the colleagues actually assisted us to say it's not just some, but it's most of the properties, they are renting them out. So we wish to make that correction, colleagues. Thank you so much to the colleagues who have assisted with that information. So another interesting question that we received on YouTube was whether the Treasury regulations are applicable to Schedule, I think, 3B entities, because we spoke a lot about 3A and 3C. Yes, overall, the document is applicable to those entities, but specifically Regulation 16A is clear that it's only applicable to the entities that we just spoke about, which is 3A and 3C, and also departments and constitutional institutions. We also received interesting questions, colleagues. One of them that I laughed at the most was not that it was a wrong question, it was just a funny question. It was around asking whether girlfriend allowance is fruitless and wasteful expenditure. Colleagues, we made a video response to this question. Another question that we received was asking about bribe rates. Colleagues, I'm sorry, I don't know that one. If it's not in the legislation, I probably won't know about it. So, some topics that the colleagues have actually said that we should also consider in the channel. I only selected three at the moment. There were more of them, but these three seem to come up a lot. In fact, it's two, and then there was just another suggestion that was made based on the previous episode. The first topic that was suggested by one of the colleagues, it's unauthorized, irregular, fruitless, and wasteful expenditure framework, the recent one that was released by Treasury. Colleagues, we are reading on it. It's just a matter of time before we start developing an episode around it to break it down. So another one was us covering consequence management. It seems to come up every week, this consequence management. So consequence management and financial misconduct. Colleagues, I promise you, after we deal with supply chain, we'll be focusing on financial misconduct. And then we also deal with what's the other one? Consequence management. So we will deal with them, the two of them. It might be on one episode or it might be on two episodes, colleagues. So another suggestion that was made online based on our previous episode was that we should also include subsection 2 of section 217 of the Constitution, because last week we only quoted 2171 of the Constitution when we were introducing supply chain, which is a good suggestion, colleagues, and thank you so much to the colleague. I just forgot the name, the colleague who suggested that why are we not also including this subsection. The answer to that, colleagues, was that we are still going to talk about the preferential procurement regulations. This subsection 2 specifically brings life to it. It's the foundation of it. So it's not that we did not acknowledge its existence. We knew it's there and we knew we were going to talk about it. But last week was just the introduction on the fairness, equitability, cost effectiveness, and all the other attributes we mentioned of the supply chain process. So, colleagues, as promised last week, this week we'll be speaking about competitive bidding for departments, again, Schedule 3A and 3C public entities, and also, I think, constitutional institutions, of which where the Section 16A applies. So, when we talk about supply chain, colleagues, we're talking about an area that is highly regulated, and its regulation is stemming from the primary legislation of the Republic, which is the Constitution, Section 217, which brings life basically to the PFMA and the MFMA, and also the Treasury regulations, which support the PFMA. And today we'll be introducing a new aspect of the regulations, which is the Preferential Procurement Regulations, which we will have to now quote that section 217 that the colleagues suggested. So, colleagues, last week we touched on only section 2171 of the Constitution. This week we are introducing subsection 2. As you might recall, subsection 1 spoke about a procurement process being fair, equitable, transparent, competitive, and cost effective. So subsection 2 is only stating that subsection 1 doesn't prevent the organ of state or institutions referred to in that subsection from implementing a procurement policy that provides for categories of preference in the allocation of contracts and also protection or advancement of persons. So these persons or categories of persons disadvantaged by unfair discrimination. So in essence, also considering or giving preference to people who were historically disadvantaged, whether in terms of their race or in terms of their gender or their abilities. So HDI, or historically disadvantaged individuals, will include the race element. As we know, we have a dark history in South Africa. It will also include the gender, because women were also unfairly discriminated in the past. It will also include children. It will also include people with disabilities. As we said, based on the instruction note we quoted in the previous week that was speaking about thresholds anything above 1 million, the accounting officer must initiate a competitive bidding process for those type of tenders. So one of the things that we need to take into account before we go on tender, colleagues, it's not all of them, by the way, but it's just the few that I selected. I think about 3 of them. These are identifying a need, whether we really need to go on this procurement. For instance, the Department of Human Settlements wants to perhaps go on contract for the building of RDP houses. So we need to identify if there's really a need for this. Maybe because there are mushrooming townships in South Africa every day, maybe every minute. I'm certain even now there's someone putting a shack in an open space. That need has to be determined, and so the Human Settlements Department will see that there is a need for people to get housing. That could be one of the elements, that there are mushrooming townships or mushrooming locations that are coming up, and its business is to provide housing to the people. So also, the item has to be linked, or the need for the procurement has to be linked to assisting that department in achieving its mandate or purpose. Colleagues, remember when we spoke about the terms of mass destruction, when we defined unauthorized expenditure, we said number one, it's basically overspending of a vote. But there's a second element of it which is very important, which is speaking about expenditure that is incurred not in the purpose of the vote or in the mandate of that department. So it's important that before we go on tender, we make sure that what we are tendering for is in accordance with our mandate, because it might attract a lot of subjectivity around this unauthorized expenditure definition. So another aspect that we need to make sure of, goods that we are aiming to procure, we need to make sure that these goods are not already available on transversal contracts, whether by Treasury or by CETA. When we say transversal contracts, you would find that Treasury is already procuring on behalf of government certain items. Like, for instance, when COVID first came to South Africa, Treasury was procuring the protective equipment that is used in the public sector for public sector employees. They were already procuring for it. So all departments needed to go through Treasury to get those items, even though at the end Treasury or the government also allowed other departments to start procuring on their own. But that's what we mean about a transversal contract. So once the above is satisfied, we can start moving to having some drafting bid specifications. So it's in the regulations as well that a supply chain management system must, in the case of procurement through a bidding process, provide for the establishment, composition, and functioning of Bid Specification Committee, the Evaluation Committee, and the Adjudication Committee. As we go through this episode, you will start understanding the purpose of these committees, colleagues. So talking about the Bid Specification Committee, it must develop, basically their sole purpose is to develop technical specifications and also determining the evaluation criteria that might include items that are already in the PPFA. So when we say we are developing technical specifications, for instance, going back to our example of building a house, RDP houses, we need to know the size of this RDP house, what type of bricks are we going to use, what type of cement are we going to use, especially for the slab. basically all those technical specifications, some of them you might see them on the bill of quantities in the tender document. And then when we talk about the evaluation criteria, it might be whether we consider capability and capacity of whoever we are considering giving the award to, and also speaking about the 80-20 or 90-10 criteria. Basically, 80-20 is applicable to anything below 50 million, and 90-10 is applicable to anything above 50 million. It's just the 80 element is relating to the price that is the bidder puts forward, and also the 10 or the 20 element speaks to it's no longer BEE from what I gather, but it speaks to some of the attributes that are checked on the BEE. I just forgot. I'll have to check the PPFA colleagues, the new one, but the old one used to speak to the BEE level. But the new one, it lists all the things, the specific criterias that they will be looking at, which might also include people who are historically disadvantaged and all of that. But there is a specific criteria around it. So the Bid Specification Committee is also expected to draft specifications in a manner that ensures fairness and competition. It should avoid making reference to brand names, because chances are, what if that brand also comes to compete in a bid? People will be triggered quickly to say, okay, I know, let's just go for this person, because we're already mentioning them in our specifications. So this basically just speaks to the fairness element of the supply chain process, colleagues. And these should be approved per the SCM policy. So it's very important that the SCM policy is aligned with the legislation or instruction notes of Treasury or any government regulations speaking to the SCM process, because here we are trusting the SCM policy that these bid specifications or this composition of this bid committee, it should be per the SCM policy. So once the specifications are done, colleagues, it's time to invite people to tender. So the accounting officer, this is Regulation 16A 6.3c that I'm about to read. The accounting officer or accounting authority must ensure that bids are advertised in at least the government tender bulletin for a minimum of 21 days before the closure. So once the specifications are done and we go out to invite people, we need to advertise in the government tender bulletin for a period of at least 21 days. So we will start counting 21 days. Colleagues in practice might assist me in this, but this does not consider working days. It's just literally 21 days. Whether we reach a weekend, it's 21 days. Colleagues. So the bids must be advertised for 21 days. And it further says, except in urgent cases when bids may be advertised for a shorter period as the accounting officer or accounting authority determines. This is a deviation, colleagues, so it's something that we will touch on, I think, next week if we finish the competitive bidding process in this episode. So also speaking about the invitation now, based on the Treasury instruction note that competitive bids must be advertised in at least the government tender bulletin, as we mentioned, and also at the e-tender publication portal. They may also advertise the competitive bids. It's important they may also advertise the competitive bids. So it's not really a must, but they may advertise the competitive bids on their institution's website and any other appropriate media should the accounting officer or accounting authority deem it necessary to ensure greater exposure to potential bidders. Even though this instruction note says may, but if the SCM policy is saying we will also advertise on these avenues, it's important that we also advertise on those avenues as well. Funny part, the instruction note makes it explicit that the costs for advertising will be of that accounting officer or accounting authority. We can't be claiming from Treasury that we know we have advertised. No, it's your costs. So it's important to also highlight what the preferential procurement regulations say about the invitation. So on the advert, we should also stipulate the applicable point system that will be used. Tender documents also include the advert, colleagues. Also, tender documents will include the pack that you're going to buy from that department. I know some of them sell it for 300, some of them sell it for 500 rands. So on those tender documents, it should also be stipulated the criteria or the point system that is going to be used. Again, that 80-20 or 90-10 system. But if it's uncertain in terms of which criteria will be used between 80-20 or 90-10, because of the value limitations or the specifications are not really clear how much the tender will be. It might go above 50 million, it might be less than 50 million. It should still be stipulated. If we can't tell which system we're going to use, we should just mention both of them, that the tender will be evaluated using 80-20 or 90-10. So now that we are done with the invitation, the bids will start coming in. People will come and buy the bid documents from the entity and then be given their bid pack. The bids will start coming in. And once the bids come in, we need to evaluate these bids. So the Treasury regulation also states that the bids were evaluated by the Bid Evaluation Committee per the SCM policy of the department, the constitutional institution, or the Schedule 3A or 3C entity. So if you remember the other regulation that we quoted, it mentioned that the SCM policy should include the establishment, the composition, how many people we're going to have and what type of people we're going to have, and also the functioning of that committee. So how are they going to evaluate these bids? So as you can hear here from this Treasury regulation is that bids should be evaluated using that SCM policy. So as I mentioned earlier, that tenders up to 50 million will use the 80-20 criteria, and above that they will use the 90-10 criteria. So once the evaluation is done, colleagues, so the Bid Evaluation Committee is only evaluating the bids, allocating points to the bidders who are there, and also basically testing the capability and capacity, basically looking at the objectives we are trying to achieve with the bid, and also the point systems that we are using. How are people gaining points for this tender? Basically, it's just evaluating which person is more suitable, more capable to take care of this tender for us. So the bid evaluation, once they are done with that process, they will then recommend to the bid adjudication. So the bid adjudication is more like the judge here. They are the ones who are saying, no, this tender should be given to this person as opposed to this person. So the Treasury regulations are clear that the bid should be adjudicated by the Bid Adjudication Committee, again per the SCM policy of that entity. So another very important point to make is that the bid adjudication is allowed to award another bidder, not necessarily the one that was recommended by the Bid Evaluation Committee, but this should be done per the SCM policy, and the reasons should be justifiable. They should make sense and they should be documented, and these reasons should be approved by the delegated official. So The triple PFA also allows this. They have a set criteria. Again, it could be that the bid evaluation committee, sorry, the bid adjudication committee will say, no, we need to meet a certain policy objective. So a policy objective, again, could be giving rather the business to people who were historically disadvantaged as opposed to the recommended bidder. If there's a bidder who's more on the historically disadvantaged criteria, so the bid evaluation committee is allowed to say, we should give this tender to this person. Again, those reasons have to be justifiable. They have to be per the SCM policy. They also have to not breach any legislation, colleagues. So it should be justifiable and it should be fair and just. As we said, the SCM policy, there should be fairness around it. So fairness will also include it being equitable, colleagues, which again will speak to giving business to the historically disadvantaged individuals. So once we are done and we make our recommendation or we make our selection on who will be awarded this tender, the instruction note also stipulates that the accounting officers or accounting authorities must publish the awards of the bids in the government tender bulletin and the e-tender publication portal. So it also states that they are allowed to publish the awards of bids in any other media the bid was advertised on. So when we made the invitation and said we will publish this on these platforms, even when we make the award, we should publish on all those platforms that we had published on. So another important thing, colleagues, about this whole process, now that we are done with this process of adjudication and we've selected our winner, colleagues, these are some of the things that are very important concerning the winning bidder. It might not be all of them. There might be more in the legislation, and I'm happy if the colleagues would also suggest some of them. So it's important that the winning bidder was not involved in the Bid Specifications Committee. So remember, the Bid Specifications Committee is the one that came up with the technical specifications and also the point system that will be used, or the criteria that will be used. So the winning bidder should have not been involved in that committee because, of course, they will draft something that will benefit them, or they will suggest something that will benefit them. So their bid, we should make sure that their bid was received before the closing date. We can't have a bid that is sneaked in after the closing date and then that person wins the bid. So it's important when the bids are being opened that we have a bid register that is marked, and that should not only be looked at by one person. Segregation of duties is always a good idea. Someone else should do the review, or someone else should do the moderation of that process. So it's also important to note that the winning bidder should not be a prohibited supplier per the Treasury prohibited supplier list. There are people who are culprits of not performing on tender contracts. Treasury prohibits some of these people, or prohibits these people from ever procuring in the public sector. I think the triple PFA also touches on this, that they are given an opportunity to justify why they should not be prohibited before they get prohibited. So it's not just a matter of you did not deliver, we prohibit you. So it's also a process which includes investigation and hearing each side of the story before a decision is taken. But what's important is that the winning bidder is not prohibited in the Treasury website, or on the Treasury, included on the Treasury list of prohibited suppliers. It's also important that the winning bidder is tax compliant, colleagues. I cannot stress this more than enough. You need to be good with your taxes. Our government relies on the tax money to provide services. So if you are doing business with the government, you have to be tax compliant. So the winning bidder has to be tax compliant. And the winning bidder should have declared their interest. If there's any interest, they should declare. Even if they don't have interest, they should declare so that we don't have any interest. We will touch on this on the next slide, that we'll be talking about the ethical compliance for everyone involved in the supply chain, whether you are a bidder or you are an employee of the supply chain unit. So basically, ethics is on Regulation 16A8. And just to give you high level on ethics, colleagues, it simply means doing the right thing at all time. Even if no one is watching you, you are still found as a person of integrity who's doing the right thing at every time. So Regulation 16A, colleagues of the Treasury Regulations, state that all officials or other role players involved in the supply chain management system must comply with the highest ethical standards in order to promote mutual trust and respect, an environment where business can be conducted with integrity and in a fair and reasonable manner. Again, that attribute of reasonability and also fairness, colleagues, we touched on this and we mentioned that every time we talk about SCM, all those attributes that we mentioned, which include fairness, will keep popping in. Even when we're talking about ethics in the supply chain system, we will still speak about fairness, mutual trust between the bidder or the prospective supplier and the department or the entity that they are going to be supplying on. So this regulation also states that the National Treasury Code of Conduct for Supply Chain Management Practitioners must be adhered to by all officials and other role players involved in the supply chain management system or supply chain management at that point. So this part of the regulation speaks to the officials now. A supply chain management official or other role player must recognize and disclose any conflict of interest that might arise in the process. If they are involved in the supply chain management process and there's a possible conflict, this must be disclosed, so that there could be safeguards that are put in place, whether the person is removed, is excused from the supply chain process of that particular bidder, or where the interest is, or other safeguards being put in place. The regulations further say that the supply chain management official or role player must treat all suppliers and potential suppliers equitably. They may not use their position for private gain or to improperly benefit another person. So private gain to benefit them or to benefit another person unfairly so in the process, and must ensure that they do not compromise the credibility or integrity of the supply chain management system through acceptance of gifts or hospitality or any other act. So basically, they should not allow themselves to be in a position of being marinated by the potential suppliers or people who have interests. They must be scrupulous in their use of public property and must assist the accounting officers or accounting authorities in combating corruption and fraud in the supply chain management system. So, colleagues, the regulations further say if a supply chain management official or role player or any other close family member, a partner, or associate of that official or the role player has any private or business interest in any contract to be awarded, that official or other role player must disclose the interest that they have. They should also withdraw from participating in a manner whatsoever in the process relating to that contract. This again to protect the integrity of the process of supply chain, colleagues. Whether interest is close or far or remote, as long as an interest exists, that official should be considering withdrawing from that SCM process. So, an official in the supply chain management unit who becomes aware of a breach of or a failure to comply with any aspect of the supply chain management system must immediately report the breach or failure to the accounting officer or accounting authority in writing. So it's not just the person who has an interest. If someone else is aware of a certain interest existing, then that should also, colleagues, be disclosed. It should be reported. Again, the whole essence of ethics is to be found doing the right thing and also protecting the integrity of any process that you are involved with, and in this case, which is the supply chain management process. The ethics around supply chain are very, very much important because they could basically compromise the integrity of the supply chain process. Ethics are very much important, colleagues. They are very much important. They are very much important even in our careers. They are a highlight. They are a hot topic even in our board exams that we are writing in our careers. Ethics are very much important. So, colleagues, that brings us to the end of the competitive bidding process. Again, if we missed anything in the process or we did not interpret anything properly, colleagues, please engage us. Please bring those comments coming in because they help us reflect as well. They help us go back to basically the information that we looked at, help us go back to the legislation, and they help us also improve our knowledge, colleagues, not just us as the accounting officer, but other people who are involved in this community that we are trying to build. I encourage you, colleagues, to bring in those comments. Let's discuss, let's have fun, let's just dissect public sector information and knowledge. Colleagues, again, once more, for those who do not follow us on social media, the accounting officer is available on Facebook and Instagram. The page name is called Accounting Officer. On TikTok, the page name is called Accounting Officer, but the handle is Accounting Officer SA. On YouTube, also, the page name is called The Accounting Officer, but the handle is Accounting Officer SA. I encourage you, colleagues, to please subscribe to our YouTube. TikTok is growing faster than our YouTube. So, colleagues, I've been getting messages online around making the slides or the information that I'm using available for colleagues to download. We are considering that, colleagues, but we just need to make sure that we are ethically aligned in that process. Also, checking with Treasury as well if we are allowed to make rebranding of their information available to other people, and also to check with other stakeholders involved in the process if I were to make this this information available, what type of ethical declarations I would need to make, because I'm a professional, colleagues, and a professional registered to a professional body. So yeah, we will keep you posted about it, colleagues. And that brings us to the end of this episode. Colleagues, thank you so much. Have a great day.